What are the different types of source documents? In the real world, there's potentially dozens, even hundreds of different types. We're going to keep it simple. And to keep it simple, why don't we just say, look, this is basically how business works. It's obviously a lot more complicated than this, but we'll say there's suppliers, there's our business, and then customers. So remember, in our subject, we're not thinking like a customer anymore. We are the business. So from our perspective, what is business? Well, you're going to have suppliers. They provide inputs to the business. So things like inventory, labor, materials. They're the things that we need to run the business. We're going to get those from suppliers. Those suppliers can be people, they can be other businesses, and those transactions are going to be cash. Sometimes they'll sell it or provide it for cash, and other times it'll be on credit. And we'll pay later. So that is a transaction. And then we've got to pay for everything we might pay on the day. But then if it is on credit, eventually at the end of the day, no matter how you cut it, we're going to have to pay some cash. Maybe not literally physical cash, a bank transfer, for example, but we're going to have to pay those suppliers for the things that we bought. And then the other side is we then got to sell all those products that we make or buy to customers. And again, customers can buy for cash or credit. So there's a transaction here to prove that. And then customers pay the business back. So it might be on the day with a cash sale, but lots of businesses sell things on credit and you get to pay it off over a period of time. So that's if we summarize and say that's how business works, all we're going to do is say, well, there's going to be source documents to prove that this lot happened, source documents to prove these ones happened, these ones, and these ones. All we need to do is just sort of learn their names and process them. So we're going to just start with that little simple concept and say every time a transaction occurs, there's basically going to be an original version of the document and a copy. Okay, and the original version generally is given to the customer or the client. The person who's buying usually is the person who gets the original of the document. So for example, if you go into Rebel Sport today, buy a pair of Nike shoes, you're actually the one that gets the original receipt that comes out of the cash register. You get it, that's actually the original. Rebel, however, will keep a copy. So we generally say the copy is kept by the issuer of the original version. So in this case, Rebel will keep a copy and you go, hang on, they only printed one receipt and gave it to me. Where's their copy? We don't mean a physical copy, it could be, but it's just going to be a copy that's kept in their computer system. So it doesn't matter where the copy is and what form it takes, as long as there is a copy, and Rebel can go and get that if they ever need it in the future. So to summarize, we've got the transactions from suppliers to the business, and let's just keep it as simple. There's going to be other ones throughout the year and it'll get a little more complicated, but for now we can say, look, one transaction there is the cash paid by the business. When we pay someone, the source document is going to be a cash receipt, which we will have the original. What do we mean by that? We mean we gave money to a supplier and they gave us a receipt. So in that case, we're kind of the customer there. So we'll get the original. We will also deal with a whole bunch of different transactions. EFTs and electronic funds transfer. Maybe we pay something online with our bank, or BPay, that's a very popular way to pay bills in Australia, or maybe even a check. That still does happen. And when we give those to suppliers, we'll actually have the copy because it's the supplier who's getting the original. There might also be when we buy things from a supplier on credit, we don't pay today. That is going to be known as what's called a purchase invoice. Invoices are for credit transactions, receipts are for cash. But for purchase, buying on credit from a supplier, that's a purchase invoice. And the business will have the original because we're the customer. We're going to look at this one, and it's actually not until Unit 2, so let's not worry about it too much. But sometimes we're going to return stock to a supplier and get a credit. That'll be a credit note, but we'll come back to that later. What about on the other side? There are times when we sell things to customers for cash or credit, and then they give us the money. So the main transactions there are when we receive the money from the customer. The document we will give the customer is a receipt. That's the easiest one for us to think of because we've all bought things from Rebel or Coles Supermarket or Apple. What do we get? We get a receipt, but from the business's perspective, it has the copy of that. Okay, the customer always gets the original. We could also make a sale on credit as a business. So instead of a cash receipt, receipts are for cash transactions. It's an invoice for credit. However, we just changed the name a little bit and we say instead of a purchase invoice, we say a sales invoice, and again, the customer will get the original, so the business will keep a copy. And lastly, we won't talk about this now, we'll come back to it later in the year, but there is also times when a customer brings something back, like it's faulty, for example. We've got to give them a credit, that is a credit note, and the business will keep the copy.